Well, good morning, everybody, and welcome to the pre-market rundown for Friday, January 24th, 2020. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts. I want to welcome everybody and mention a few things up front before we go any further. First of all, there's a chat that you'll see down or to the right, maybe to the left of the screen that you're looking at right now. And in that chat, you can ask me any questions that you want or discuss any things that you have on your mind, maybe some stocks, maybe some futures, maybe some symbols that you want to take a look at. I'm going to post something right now into that, and that is the link to the trading store over at TradeStation, where you can find 10-day free trials of every single indicator that we're talking about today. And of course, as I mentioned before, I'll just mention this at the top, anybody who actually comes and subscribes to the Commander series will get a 4-hour coaching session, training session, introduction, and explanation all the way from beginning to the more, I would say, more intricate side of market profile as well as technical analysis. So just email us at support@triggercharts.com for that. Hopefully everybody can hear me fine. We're going to start this off before we get any further with a quick poll. And as I'm doing that, you'll see that should pop up right now. It's asking, hey, where are markets valued at this point, in your opinion, or from your research and work in the technical analysis area? That should have popped up, that poll. So everybody, please do me a favor and take that poll. As we're doing that, I'll mention this for educational purposes only. It's not a recommendation to buy or sell any security. Please note the disclaimer that we have right here that we're showing you, and make sure that you are looking at this area. There is nothing as it should be deemed anything more than just simply educational purposes only. All right, we have a couple more people. We're going to leave that poll open for a second. Do me a favor, click on that. We have a pretty good group here today. I see about 40% of people have voted on that poll. I'm kind of curious as to where you stand right now. People are coming in. I'm not going to tell you where it is and where people are right now because I see this popping right in front of me right here. But we're getting close to finding out. So where are we? Let's close this down. To the right here, what I have on the chart, what we're looking at here is copper. Dr. Copper, and what is it showing us? This is a daily chart of copper. It's been rising up since September, a little bit volatile, of course, as the trade war was moving along until that resolution in December. And we got that move from December, a nice move from about 265 to about 287. Now, all of a sudden, what's happening? Well, some of the news items, particularly in China and Asia, are really starting to cause problems in that there is a question as to whether this coronavirus, which popped up out of nowhere, seemingly is very hard to detect and diagnose, is making its way through Asia, primarily in the Wuhan district and area of China. There's somewhere around 800 or 900 cases right now. China has shut down about, I think it's close to 14 million people into a containment zone that they can't leave. They've shut down travel from airlines in and out of Wuhan, shut down the ride-sharing services in Wuhan as well, and that's pretty significant when you think about that. So what we're seeing right now is a concern that this could, in addition to the tariffs, in addition to the slowdown in GDP in China, in addition to all the things that are going on a global basis, cause one more wrinkle in the China growth story. Looking at, it could potentially cut as much as 1.2% off of GDP, bringing it down to like 4.8%, which will be the lowest, I think, on record for China's GDP moving forward next year. We'll see how this is contained. So far, markets have been taking it in stride. At first, there was some concern because we saw a case in Alaska. There was some concern because it's in Singapore, it's in Japan, it's making its way through Korea, it's making its way through a variety of areas throughout Asia, but primarily, again, located in China. And there was a concern that, wait a second, is this going to be containable? It is deadly. I think upwards of 10 people have died so far, unfortunately, because of this. But, of course, if it can be found early, it could be possibly diagnosed and cured. Let's get over to our poll real quick. Take a look at this. What do we have? We have about 95% of the people voted. 60% have voted just right. And the remainder are saying that the market is overvalued. We're going to look at some of our value indicators as well today as we go through this discussion. But let's get back to that. I'm going to end that polling right there and close that down so we have something to look at over here. So the World Health Organization is not so worried just yet. They put out a claim yesterday that is not a pandemic. It's not a global concern at this point. Markets turned around and rallied off those lows yesterday pretty dramatically to end the NASDAQ up yesterday, the S&P slightly up, and the Dow did stay down. Today we're seeing futures on the Dow is up 66, fading a little bit. It was up about 100 earlier. The SPUs are up about 5, the NASDAQ up about 23. And again, copper is down about 70 basis points. This major slide since the outbreak happened. You can watch copper as a pretty good indication of concern on a global basis for global growth when it comes to this particular virus. It's a pretty good tell. Asian markets did take a hit on that. We saw the Shanghai. They're closed now, by the way, for the New Year, the Lunar New Year, which is a very important time in China's economy. So you have a combination of Hong Kong unrest hitting China. You have the issue of a general slowdown. Now you have on top of that the tariffs, and add one more thing, one more layer. And what do we have? Well, we have this coronavirus that could be causing major problems in one of the most busy tourist and consumer times of all for China. And now what we're seeing is that it's happening smack dab right in the middle of it, causing concern that maybe there's going to be some growth shortfalls and production shut down for some time, infrastructure builds put on hold. Big problem. The Dow Jones Industrial Average did end, or it's coming up on an end of its worst week in months, and pretty much a big thank you to Boeing for that, as Boeing's fleet is grounded sometime until at least mid-year 2020, even though they talk about production possibly coming up. The company did get a $10 billion line of credit, loan, debt offering, whatever you want to call it, in order to pay for the damages that were in the form of liabilities, as well as damages to their funding due to the fact that they're not building planes and not taking on any orders for the 737 MAX. Big issue right there. Earnings season. Hey, earnings season's been coming out, pretty well so far. Tech bellwethers will start rolling in next week. We did see IBM, not so much of a bellwether anymore. You got the Microsofts coming up soon. You got Facebook. Netflix reported this week. They liked it. They didn't like it. Then they liked it again. So they came up a little bit light on their subs. But the financials came out, I would say, generally speaking, if we take the chunky part of the financial reports, pretty much just as expected. There was a few outliers in there. We saw some Wells Fargo numbers come out, not so great. We saw that, Morgan Stanley came in pretty much as expected, but I guess the best way to describe it is goosed their earnings and their estimates and their profitability moving forward. Stock was up about 8% during the week, last week on those numbers, or this week on those numbers. What else do we got? So I guess we can describe the current environment as, once again, so far so good. Not seeing a lot of issues that are headwinds right now. The impeachment hearing has pretty much been bagged as it's not going to make its way through Senate. We see that the phase one is done. We even saw Mnuchin talk about new taxes that will be cut for the middle class. They're working on that. I mean, obviously that's right in time for a political cycle into an election year, only a few months away, and talking about how there's going to be another tax cut. I don't know how they're going to pull that off with the deficit and debt as high as it is, but they're going to try. The KRI, which we're going to get to, one of our psychological overbought, oversold indicators. We're going to get to that in a second. Slightly overbought. Trend indicators starting to fade a little bit, but it'll depend on the next couple of days how markets kind of play out right here. Going down, let's actually click over to that. Let's take a look at that. This is the KRI here. So you can see the KRI indicator right below my video, probably right there, is talking about a slightly overbought situation. We can look down on the bottom of this, and we can look right about here. We can see that, generally speaking, it's in the +2 range. Not as high as we saw right there, which was a +4, and that was a warning. You can see that kind of kicked off a little bit of a downtrend coming in right now. Starting to roll down ever so slightly on the KRI, on the daily index. And all this indicator does is one thing. It just utilizes psychological indicators and blends it with the S&P 500 or the SPY ETF as a broad-based indicator of the stock market. Puts a variety of other indicators behind it to give you a psychological indication of where we are. Oftentimes, if you're below the zero line, that's a concerning area until you get down to the -4, -5. Then you start getting buy points as oversold readings. Those are, in my opinion, much better than the overbought readings. those usually resolve pretty quickly. So right now we are in, I would say, nowheresville, right? It doesn't look like we're, hot or cold, a little bit hot. We're really not seeing it too dramatically overbought at this point, so that's good. And that usually means that the trend continues. What we do with this particular indicator is also give you some verbiage, some information along with what it means. So right now it says the overall market is measured by the KRI, or the key reversal indicator algorithm, is near equilibrium with a slight bias toward upside movement. Watch for a trend to continue with directional movement skewed toward increased demand and not enough supply. That's the potential right now as we sit. Things can change on a regular basis, but right now that's where markets sit. The other thing that I want to show you is this. Oh, I don't want to show you that because I got to clear the drawings. Got a lot of clicking here on these webinars. Right now, what we're looking at is a McClellan Indicator. The McClellan Indicator right now is looking at a negative 24. It's been holding above the zero line for a while, since December. Very good, complex reading above the zero line, as I believe Tom McClellan would tell you and explain this to you. Starting to fade down, starting to get a crossover right here on the Spearman Indicator. And we're starting to see 52-week new highs and lows starting to drag down ever so slightly. So we pretty much peaked out in the range about last week or so, the week before. And now we're starting to see that roll over a little bit, the trend, a little bit of a divergence on the McClellan, which blends the advanced decline indicators and a variety of other measures. So I think it's really important to recognize the trend is starting to slow down a bit. That doesn't mean it's going to pick up, nor does it mean that it's just going to turn around to the downside. But now that we have a few things kicking off, even though that we see futures breathing a sigh of relief due to the fact that the WHO, the WHO, the World Health Organization, is not proclaiming this at this point a concern, I would venture to say that no matter where we end up on the day, I think we'll be lower, well, not lower, but lower from the peak into the close. I don't think that a lot of people are really going to be thinking about holding on to a position if they are trading into the weekend, particularly when it comes to broad market-based indices. The reason is that we could see anything happen over the weekend in terms of this spreading of this particular situation. So let's get to a couple of things. Well, let's get back to, moving markets this week. Of course, we have buy the dip that has been kind of holding up pretty well. Any piece of bad news is quickly turned around as soon as we see that there's a resolution to that particular piece of bad news. Earnings season, of course, we see that happening again. Next week, a very big week. The following week is even bigger, but next week's a pretty big week as we really start to see the chunky names come out. We have some new headwinds that have now come into the market, particularly with this new coronavirus. Economics next week, we have new home sales. We have durable goods. We have fourth quarter GDP, the first read of fourth quarter GDP. And I think that's going to be very important to look at to see how we actually finish the year and how we are looking at the following year. Estimates are on the 2.1, 2.2 range, somewhere around there. There's some lower, some higher, but generally speaking, the 2% number, that Goldilocks, not too hot, not too cold, is still playing out pretty well. We have an FOMC rate decision. Expectations are for no change by them. I will mention that the Fed is still priming the markets. We saw that last week they put another $25 billion into the short-term overnight lending into the repo markets, and that has been a source of liquidity for markets, giving them the ability to pretty much withstand any of the big concerns that are going on right now. So we're going to look at stocks. Tesla, APT, interesting name, actually into this. They make masks and gowns and smocks and frocks and all sorts of other things that oftentimes you'll see that this name gets a lift into any of these kinds of news items, in particular when you saw the bird flu, Ebola, SARS, you name it. This name often gets a lift. Traded that yesterday, overnight, picked up about a 12.5% gain on that. That was good. Moved out of it as soon as the WHO announced that they're not too concerned. But again, going to the weekend could be a very interesting situation both ways. If, in fact, we see that the outbreak does kick up substantially, well, you may see this stock start to move up a little bit. But other than that, the stock is really dead money. Otherwise, I don't really see anything in it. But it's a news headline-driven name that you can track technically pretty well. We looked at, of course, on the right-hand side here, we looked at copper. We're going to look at Alcoa, miserable. Freeport McMoRan, miserable. SPCE, I've talked about that for 3 weeks. Did anybody look at that name and look at the technicals? It's up close to, I think, 95% since I first started talking about this when it was at about $10.15 or so. X, miserable. Beyond Meat's getting a little bit of a reprieve possibly, and VFC came out with earnings this week. Kind of interesting. So let's take a look at some of this. Tesla, now at 572. Name is extended dramatically. We still see that the aileron, which is our momentum trend indicator that uses about, I don't know, 15 different indicators inside, blends them, scores them, rates them, and comes out with a consolidated answer. Looking like it's still pretty good from the buy side, although it is very overextended. Not much going on, not much to the left. It does show that we are in a long position. I think that it's earnings are coming out. We'll have to see how that plays out. But Tesla's been a really good play, very good indications, very good liftoffs from the altimeter and the autopilot. When we turn yellow, it's an alert some way, either long or short. The bias, we look here on the top, we see we have a long bias for 16 weeks. That is, 16, excuse me. This is, let me just go up here. Let me show you what this looks like. All the way to the top, you have the 30-minute, the 60-minute, the 240, the daily, and the weekly. And you can mix and match these a little bit any way you want. You want to put, 120-minute, 240-minute, whatever you want to put there. 90-minute, 60-minute. It has to be in intervals of 30 minutes on top. So right now it's been 16 bars on the short term. You got long, 21 weeks long for this. And in fact, if we take this and move this to a weekly time frame, you can see that this was called long right here. Looking closely at this, you can really see how great this was from an incredible consolidation. You got this, and then you kind of got this big move to the upside of that without a break on a weekly chart. So if you're trading longer term, if you're trading for more of an investing standpoint, obviously you moved from about 250 to 590. You can calculate that. That's more than 100% move on this. So pretty impressive how the weekly really pulled that in nicely. Go back to daily for a second. There was a couple of layers of where there was some consolidation, got you back in, back out. Very quickly moved, got you back in quickly, out again, back in again. So it really wasn't, you didn't miss a beat on Tesla. I don't know if anybody trades Tesla, but pretty interesting. APT. APT is up at 3.5% today. This is what I'm talking about. You see, it does nothing here, this stock. You get an announcement, moves from about 350 up to about 550, and it moves very, very quickly. It has some trend that's starting to move a little bit higher since December, as you would expect to see with any stock in the stock market, pretty much anywhere around the world. A little bit of a consolidation that is breaking out from. You really have support down at 378. That's a long way from where we are right now at 529. Look at this a little bit more broadly. Look at this. Can I pull up the weekly? There's a weekly. You can see this incredible move off the base, but really, let's kind of take this back. Let's go back in time and go back in time and take a look. This is exactly what we saw the last time there was a breakout back in 2015. And right there was that same spike from about $3 up about, that was all the way up to about 10.5, but calmed down very dramatically and then just didn't go anywhere. This is a stock that you want to put on your list if, in fact, you are looking at, when we find a breakout and virus that is airborne, that's something I want to look at. The other one is, I'll give you this stock too, Lakeland Industries, L-A-K-E, did that go? There we go. Lakeland Industries looks the same, right? If we look back in time, same look, right? Went from about $10 to all the way up to about $30, came right back down, consolidated, hasn't done anything since. Not a great trading name, in my opinion, but it is something that you keep on your list in the event there is some kind of an outbreak of some sort. It does well in that environment. Alcoa, as I mentioned, miserable. Stock is just, I mean, is there anything good we could say about this particular stock right here? We have a simple, from top left to bottom right, exactly opposite. You want to go in like this, right? I mean, this is not doing that. So what we have right here is a stock that is below its level. We kind of can draw something right here and see it's even as we look at this and look at, let me zoom in a little bit here. I want to go right to there. So if we look at this and we look at this carefully and we start looking at what's happening here, you can see that if we were to say, well, where was that last baseline? It was about 17. Stock is trading right now at about 1639, up a little bit in the morning in the pre-market hours, but yet at the same time, this thing dropped down to about 1560. That is not a price that has been seen since when? I don't even know. Forever. Take this back to a weekly time frame. It looks pretty much just as miserable. Look at that. It's classic head and shoulders pattern. If you see that, if you look at this head and shoulders pattern, you have, right, kind of a weak shoulder right here. You know, you do some math here. You take a line from here. You look at your shoulders. You take the same length. And you're pretty much down to where we are right now. So if we were to pattern this out under traditional patterns, you could say probably we're in the range that it should be basing out as, but you have this level right over here that we're broken beyond. Not a stock unless you're really looking to take a risk for the long haul. Maybe, I don't know why, that you think that could be something that, hey, I wanted to stick it in my portfolio. One day aluminum will come back. Maybe. I don't know. Same kind of situation, not as bad. With Freeport McMoRan, came out yesterday with some earnings numbers. Look at how beautifully this on a weekly chart. It hit, I mean, smack dab on its lower level of support. These lines are drawn to utilize as support mechanisms as we're looking at price and volume. It's really important to understand these are not just random moving average lines that are added in here. What these are calculations utilizing each and every tick, adding it to where people are buying stocks, how many shares they're buying, utilizing volume and price, and then looking at where those key areas are, those lines in the sand, particularly where we're seeing the massive amount of buying happening. And you can see that there was a line that was drawn right on the bottom here. That was the support, came right back into that support thereabouts. Very good support because the two lower lines were close together. The closer the two lower lines are, the more support there is at that level. And the opposite is true as well. The closer the top lines are together, the resistance and the point of value, if you will, the what we call it, we have different names of it, but let me clear this up here for a second. Clear the drawings. If you hover over, you can just see them right there. You got the cruise, stall, and lift, and what that shows you is where those levels are. So the cruise and the lift, or if you look at the high volume node, whatever you want to call it, in particular for the blue line in the center, is close to the top or the bottom. That's a really important thing to recognize, that there is excessive amounts of support or an excessive amount of resistance at those levels. So we have some good support here. I mean, different than, look at the difference. Look at the difference on how wide this altimeter is and how wide this one is. Look at how close, for example, the support was on, let me go to this side. And once you broke support, that's something else important also. If you have really good key support and those lines are together, where you see that the altimeter, the support, and the point of control or the high volume node or the stall is in fact holding very close together, what happens is that once you break that, and once you have the power to break that, it's like breaking through a brick wall, and boom, incredible velocity to that directional move for that. So that's what you're seeing right there. All right, now, FCX, what do I think about it? You're consolidating in a range. Let's bring this back to reality. Let's bring this back to daily. You can do this on any time frame. Just look how quickly this loads. We optimize this, again, every time we put out a new release. And there was one put out a couple of weeks ago. We optimize this, and I'll mention here again that you can go get your free 10-day free trial of the Commander Series or the Aileron or the KRI. 10 days free. Everything works perfectly. You can use it for any stock, whatever you want. You know, look at this. This is now showing, again, we saw that support line that was drawn now on a totally different time frame, right? This is a totally different time frame that we see this support line drawn and respected. And we started moving up. Now we have a little bit of an area that what I call, again, this is a 30-minute chart. I would call a little bit of a hole. And in that whole area, you have the potential to move right up to about, right about here, about 1220, where you see resistance again. So easy way to really analyze the technical analysis behind the stock and what's happening there. Going back to a daily time frame as we use for teaching, there is some support If I just simply draw a line, where would I draw a line? Okay, where's the support on this stock? Well, where I've seen previous amounts of good support. Look at that. It dropped right into it yesterday and then bounced right off. Again, no magic here. But what happens is the way you use volume and the way that we calculate this, it gives you a real good level of where people are willing to put their money. So back in December, if they were willing to put their money and hold support at those levels, and there was multiple times when they did that going back, the longer that line that you could draw across and connect, the better it is. So if I even bring this down here and say, wow, there's a couple of different support points right about there at 1050, that would be the area that I would really start piling in if there was that opportunity. Same thing down below where you see a couple different support points down below. Bottom line here is it gives you a really good indication. And if you think about it, you know what? You don't need to be overwhelmed by I've seen a lot of screens. I've seen a lot of screen sharing. I help people out with how these look and how they work and what's going on. You know what? There's a lot of clutter. I don't like clutter. I can clutter this up. You know, there's a lot of things on the left-hand side on the 30-minute chart where I look at the radar and there's a lot of clutter on the chart. You know what? I like to make it very simple, color-coded. I need it to be easy because you know what? There's a lot of thought that goes into it. Sometimes too much thought that goes into the process. You don't want to be involved in that. You want to be able to make decisions, make them high quality. You want to be consistent. You want to gain the opportunity to have confidence in your trades. And that's what that's why we built this. The whole point of not having confidence means that you get into the trade and you probably get blown out too early. How many times has that happened to you? So when we look at this and we find something that's pretty much, I would say, easy. You have to learn the system, learn the process, learn the terms behind it, understand what things mean when it's a tight, when it's a loose altimeter, when you see that there's, look left and holes and fast zones and horizontal consolidation, all those things. But you know what? They're pretty quick to learn. We have a very complete instruction set as well as a lot of videos that do this. Once you get that, it's pretty easy just to look at a chart, snap your finger. I know where this is headed. I got the support levels. I can put that in as alert. If it gets there, maybe I'll pick up shares for a bounce. Take a look at this. This is something we talked about before. I talked about it as it started lifting off. Of course, this is Virgin Galactic, SPCE, liftoff. Refers in a bit of a pun on the fact they're trying to do space travel for you and me. So I'll meet you on the moon one of these days. Maybe Mars. It broke out of a long-term, this was a SPAC, a special acquisition, a special purpose acquisition company for a while. Got moved into this Virgin Galactic, went down, but once it started moving up, it really started to ramp higher like a rocket ship up from 11 up to about 20. Right now, it's consolidating these levels. We'll see how this plays out. Going back to the materials companies that look obnoxiously awful, you have to look at that. You know, this is X. Do we have support here? Kind of keep on backing up your time frames. Is there support? We got no, not really. As a matter of fact, we got a aileron that's slowing down. We have an ugliness in the chart. We have a trend that's just god awful. Nothing there that excites me. I don't know how you look at this, but we called these shorts pretty well here. Called the short about 1138. Currently trading about 9. What is that? Probably about 15, 18%. Intel is rocking this morning, all-time high, up about 5% in the pre-market as they blew past earnings dramatically last night. And you see that going to be moving up to the 66 level off the chart, somewhere up about here off the chart. That's going to help our NASDAQ, which is now trading, up 27. The Dow's up 90. And the ES up, the SPOOs, the S&P 500. Mini futures up 6.75. What else we got on the list? Beyond, I don't know if anybody's trading Beyond. This is interesting play here right now. When it did launch off of that, look how great that consolidation was. Very tightly packed. And then when we broke out, we got this springing effect. We got this kind of move right up beyond it. And it was really great because what you saw was a launch. A lot of shorts in this particular name. When it finally got to that point and breaking out, there was a great opportunity. We're in consolidation mode right now. If you do move above maybe 120, I would say about 128, 29, you have the opportunity to move back up to about 145. You can see that on the next level right here. I think you'll probably see a lot of bouncing around down the 100 area. Looks like it's probably some decent support right there as we saw some past indications of that. And finally, VFC Corp came out with some miserable earnings this week. Once again, we see the same thing happen time and time again. You just draw a simple line across, and what do you notice? You know, where was that last support level? Well, it's right where it stopped. So this will give you a good indication if you were thinking about getting in, maybe when it was at $88, maybe you say, well, you know what, the support's at 85, maybe I'll start getting in at that point. Anyway, I want to thank everybody for joining me today. This will be recorded. It's going to be on the TriggerCharts.com website, as well as a whole host of videos that are available for you as well for training, etc. Make sure to go to the Trading App Store, check out what's going on there. And on top of that, there's our bell. The YouTube channel is also available. Make sure you subscribe to the YouTube channel because most people see this in other areas and go live. We have a big audience. Not a lot of people are really too excited about seeing it after the fact, it seems. But you know what? Subscribe to it. You get some of those and can refer and refresh yourself on those in the future. Thank you so much for joining me, and we will see you again next week.